Hi everyone, welcome again to another financial analysis video with myself, Moeed Amin, and my colleague Ted Wayman. Today we are going to be looking at a very interesting company, Rivian. So if you have not been watching the news or you haven't heard about them, I don't know where you've been living under a rock here in the financial world, but Rivian is an electric automaker, an automotive technology business that was founded in 2009, and people are comparing it to the new Tesla. There's a lot of kind of terminologies about this company, especially since they IPO'd on the 10th of November of this year. So just give an idea, just a snippet of a background about this company. They're backed by Amazon and Ford. What is really interesting here is, even though they've only just IPO'd, they have been, at one point, their valuation was higher than the valuation of VW Group. Now, VW Group is the largest automotive group in the world. And to compare their revenue, VW's revenue is 120 billion euros, which is about $125 billion, or sorry, $130 billion. And Rivian's was effectively zero. So there is a lot of hype about this company. So we're going to dive into the finances. Now, you're not going to get much in terms of help on whether you should invest in a company like this from our finances. It is one part, it is an important part, but it's also one small part. And it's always back, and it's also backward looking as well. The point of these videos, ladies and gentlemen, is to help you understand and analyze the fundamental financials, which is incredibly important for your investment thesis. And so that when you look at the future statements, the quarterly reports, the annual reports, you're more able to quickly analyze and understand what's going on there so that you can make a decision on this. However, if you're also selling to a company like this, or if you're thinking about selling to another electric vehicle automotive automaker, then you're going to be in a better position to have a smarter conversation. So, Ted, let's share what we found for everyone. Really interesting set of financials, and we'll also dive into the share price and its movements, so stick around for that.
Excellent. Well, good to see you, Moeed. Yes, and welcome to all our viewers. Once again, don't forget to like, share, and subscribe to the channel, and also to post your comments. Share your thoughts. Tell us what you think. Obviously, when you're doing that, do be polite. So, Rivian, let's have a look at them. So this is available on their website. In fact, I'm not sure it is on their website. You have to dig around a little bit, but this is the form that they submit as part of their IPO. So they don't actually have any financial statements, but they do have the IPO. And if you look at this IPO prospectus, all 279 pages of it, if you can wade through that much, talking about things like dividend policy, there is not, or you're not going to get one, not for a very long time. But we've got to go all the way through to page 227 to find the numbers that we are interested in. So here we go. Here is page 227. And we've got the balance sheet there. So we're going to start with the income statement. Here is the income statement. You'll notice stands out at us the top line for the income statement. There is no top line. There are no sales. And so the sales are absolutely zero. The cost of sales, therefore, is zero, and therefore there is no gross profit. So no gross profit, no sales, no cost of sales. So all we see in this company, and we're looking at the right-hand column, don't get confused or don't get your numbers the wrong way around, is you'll notice the total operating expenses are 1,000 million, that's $1 billion, and therefore they're making an operating loss of $1 billion. Previous year was 400 million and a loss of 400 million. So these guys are not selling. Now, by the time you're watching this, maybe there's a truck on the market, maybe they sold it, and you want to tell us about that, please do put that in the comments. But as of the date of these accounts, that's the 31st of December 2020, there is zero sales, and this is the latest information that I have to go on. What else have we got? A little bit of interest income, a little bit of expense, not a lot, and therefore they're basically, the cost of running the business is a loss to the business. So it's $1 billion. That's what they lost in 2020. We are obviously getting towards the end of 2021 at the point of recording this video, and therefore we're a little bit more up to date. So what have we got on the balance sheet? So total assets are about 4.6 billion. And of that, you've got basically 1.4 billion of property, plant and equipment. So that'll be their manufacturing equipment, and 3 billion of cash. So this is a company just stuffed full of cash. Same story in the previous year, lots and lots of cash, less property, plant and equipment. So they have been growing, they've been buying, manufacturing, beefing up their production facilities, looking to therefore see some sales coming through pretty quickly. Down here, we've got the accounts payable, not a lot going on, accrued liabilities, little bits of lease liabilities that'll account for the interest, as well as a little bit of debt. Again, nothing really to write home about. 47 million of long-term debt, and 28 million of short-term debt, which kind of is really just this term debt, and some of it's now falling due. But 3 billion in the bank, they'll be able to pay that debt. So liquidity right now not an issue for them. One thing just to notice on the bottom of the balance sheet is that you'll notice that the balance sheet is negative. So the balance sheet is negative 1.4 billion. That's the shareholders' deficit. And really the difference between a company that's got lots of assets and very little liabilities, but a negative balance sheet, is these numbers here. So this is effectively what's known as a convertible preferred stock, and it's kind of like, is it stock, is it debt? Okay. And it's in there, it's convertible preferred stock, so it can convert into shares, or it can convert into debt, and they've kind of put it as a hybrid. So I'm reading that as equity. I'm gonna include that as equity, and I'm going to say that they got a positive balance sheet of about 3.7 billion rather than a negative balance sheet of 1.4 billion. Okay, but it's just to kind of, if you're trying to put the numbers into a spreadsheet and find it, your numbers aren't adding up, that's probably the difference there. Let's go and have a look at their cash flow. So there's the income statement. Here's the cash flow. You'll notice that they are burning cash. So they are using cash used in the operating activities, so is nearly $1 billion. So that's kind of reflection of the overheads. It's costing them $1 billion to run the business. They are burning cash of nearly $1 billion. You could almost say that the difference is down to this depreciation here, although there's a few other bits and pieces in there as well. They are investing in the business. We saw that. We saw a big increase in their property, plant and equipment. So they're burning $1 billion in running the business, and they're burning another $1 billion in building manufacturing equipment to make these cars. That's not a problem. They've got 3 billion in the bank, if you remember. And you can see how they've got that 3 billion in the bank. They've been funding themselves through the issuance of stock. So they have been going back to the shareholders and raising more and more capital, 2.8 billion in the prior year, 2.5 billion. And then I was reading that they actually raised $12 billion in cash. So in terms of how much cash they now have at the end of the period, here's their cash as per the cash flow statement. That's 3 billion sitting on the balance sheet. Add to that another 12 billion that they raised in the IPO, and they're going to be sitting on round about $15 billion. Now, if you're a company at $15 billion of cash and you're burning at $1 billion a year, you're going to run out of cash in 15 years. Now, a lot can happen in 15 years. So don't forget, these guys, they're going to grow. So I would expect them to start burning more cash as a result of their growing. Think about how long it took Tesla to actually just hit profitability. So these guys are not out of the woods yet. They need to grow significantly. There's also going to be a lot more investment going on. Are they going to be able to continue to tap the investors? Well, they're certainly not going to be tapping anybody for a few years. So they've got a few years grace in order to prove that, their idea, their concept, their cars, their trucks, their electric trucks are going to be the trucks that everyone wants to buy, rather than a VW truck which is electric, or a Ford truck which is electric. And I would be very, very surprised if Ford don't have electric trucks, electric cars, electric everything in the pipeline, just coming there. So these guys, it's not like it's a market where everyone's going, we need electric trucks. No one does electric trucks, and therefore they can just walk in and flood the market with their products. I may be wrong. But I'm sure there's a few people from Ford and Toyota and VW looking at this and thinking, you know, how can a company that doesn't sell anything command such a vast price? And that, I guess, comment on the price brings us on to the price. So let's go and have a look at their share price and how it has performed since flotation. So if you bought at flotation, you'd have made a small return, bit of a bumpy ride, but you will be up a positive on your return. But what I'm really interested in is that bottom number, which is the market cap, $125 billion. So this is a company that's worth $125 billion. So just to remind ourselves, it doesn't make a profit. Okay, so the P ratio is 0. Even when Tesla just broke even, it was trading at crazy times earnings, and has come off the boil since that. No dividend, obviously, so we can't really use P ratios. We can't use a dividend yield. We can't even do multiples of sales because there are no sales. If you compare that 125 billion to the book value, then you are paying, you know, a very substantial premium to book value. Book value is only about 3.8 billion if you consider that convertible stock as well as equity. So this is basically, it's all goodwill. The whole thing is all based on the premise of a great story, and it is a great story, and maybe that story will come true. But you know what, Moeed, I've said it before and I'll say it again. When you buy a stock that's expensive, there's a great story behind it, but the great story is baked into the price. When you buy a stock that is cheap, there's a rubbish story. There's a kind of like, you know, this is a horrible stock, don't go near it. And it's baked into the price. So an expensive story only needs one kind of, oh, hold on a sec, and the share price comes down. A cheap stock only needs one bit of a, oh, hang on a sec, this looks pretty good, and the share price goes up. And you can kind of think about, you know, where you want to be putting your money. So if you're a contrarian investor, if you like to buy stuff that everybody else hates, if you're kind of the Warren Buffett side, then this is not going to be on your radar. However, if you're the sort of jump on the bandwagon and ride it and hopefully get off before things kind of start to get sticky, then go for it, fill your boots. But, you know, I've seen a lot of, electric only companies. We're seeing increasing numbers of them. And, you know, as you said, you know, how can you take a company with no sales and value it at more than VW? You know, it just fundamentally, it just doesn't make sense unless over the next 10 years, VW goes, oh, electric vehicles, we don't do electric vehicles. Let's close ourselves down, allowing people like Rivian to kind of, dominate the world. You kind of get a feeling where I stand on that debate, Moeed, without necessarily asking me directly. So there is Rivian. There are the financials. They are out of date. It's December 2020. You can tell me they're out of date. That's what I found in the prospectus. They're the audited figures. I'm looking forward to them producing their latest set of accounts for the year ended 2021, and we can do an updated video.
There you have it. So if there are any engineers or experts in manufacturing experts out there who can shed a bit more light into, you know, what edge do these guys have over others, and can they really be another competitor to Tesla, then do leave a note in the comment section. Don't forget to like, share, subscribe, particularly to share and subscribe. We're a community, we're helping each other out. But if you subscribe, especially if you have requested for us to analyze a particular company you're interested in, as a subscriber, you will get notification the moment we publish that. So please do so. Until the next video, thank you, Ted. Thank you, everyone else. We'll see you on the next video.
Good to speak to you, Moeed. See you later.